This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Tuesday morning. It's a morning where we are clueless, not clueless, but clueless. No US markets overnight. US markets were shut for a holiday. I'm Prashant. With me, my colleagues Sonia and Surabhi. Guys, hi, morning.
Good morning, guys.
I don't know about you, but sometimes I'm clueless also, along with being clueless, right? That's the way of the market, perhaps. I mean, we have been having this fear of heights, so to speak. Just a matter of time, I guess, before the new highs hit. But for now, patience is a good virtue to have.
Yeah, I guess, but you know what? You can't ignore the selling as well, right? Because it's not like, 5-10 points here and there dithering along. These days, I mean, the selling is getting a little more pronounced as well.
We saw that yesterday, right?
Yeah.
And I think you're absolutely right. We should not ignore it because it's coming after what has been an absolutely spectacular move. And I think, if anything, what yesterday shows us is that one needs to sit up and take notice. We said this yesterday as well when we put out the fact that the broader market markets were overbought, the RSIs, etc. I'll get to that in just a bit. But yesterday's price action, and by the way, our colleague from the digital side, Hormuz, points out that this is the first negative start to a week since April. I mean, I think 16th or 17th of April. So it's been that long that we've not had a start to the week which was down. We had one yesterday. Now, this does raise doubt whether the move that we started at about 18,050 is starting to get a little mature. This is not to say that the overall bigger trend is changing or anything, but in any up move, however strong, however long-lasting, there are turns, there are dips, etc., which happen. And I think one should be cognizant of it, especially if you are trading. I mean, if you're investing, I mean, I think, and if you have been investing and if you've seen stocks go up, I mean, you just sit tight. But if you're trading, I mean, I think you have to listen to the market and do what the market is, or rather go where the market is taking you to. So, I mean, you've got to sort of crystallize these in terms of levels. Initially, watch for the Nifty. Hopefully, it stays above the lows on Thursday, which we made at 18,669. Remember, Thursday we had a negative, we had some selling, serious selling. Friday, the market respected the lows from the previous day and then had a positive day. Yesterday, of course, you saw what happened, selling after 12:30 mid-afternoon. So Thursday's low, in a way, becomes the first one. 18,669 is that level. But to say that, at least in the near term, the trend is changing, you need a close below the 20-day moving average, which is some distance away. That only stands at 18,585 as of yesterday's close. So those are two levels. On the upside, of course, I mean, we got to within 7-8 points of the all-time high. So we know the levels to target if indeed that were to happen. On the Bank Nifty, I mean, by the way, the Bank Nifty is already below the 20-day moving average. The 40-day exponential moving average, the level we put out yesterday as well, we are still above it. That number is 43,452 as of yesterday's close. Hopefully, maybe we test it. There is a bit of a sort of time spent around those levels and we come up in the best case kind of scenario. Otherwise, it's a bit of a deeper correction on the Nifty Bank as well. The Nifty Bank actually has been the weaker of the two indices for some time now. It's been dithering, and maybe we're starting to see the first signs of some cracks. Mid-cap and small-cap indices let off a fair bit of steam, right? So we put this out yesterday as well. Mid-cap index RSI, relative strength index, was 86. Small-cap index was 84. Anything above 70 is overbought. We got a cool-off. I mean, indices ended flat, but they were up almost 1%. From being up 1%, they intraday cooled off and ended in the green, but absolutely flat. So, again, I mean, if you're trading, you want to pay attention to these signals in terms of what the market is telling you, that maybe it just wants to consolidate it a little bit, move a little sideways. In terms of a deeper pullback, we will see once those levels I put out are breached. U.S. markets were shut overnight, so as I said, we don't have very much by way of cues from there. The headline yesterday evening, our time, was, of course, I mean, the U.S.-China meeting between President Xi and U.S. Secretary of State Anthony Blinken, and Xi described it as the meeting being very good. It was, of course, lacking in any concrete detail, but that is important to note as well. Prime Minister Modi, of course, starts his U.S. visit from tomorrow, and that will be, of course, top of minds over the remaining course of the week as well. But that's a little later. For now, I mean, keep an eye, be watchful of the market and the signals it wants to tell you. SGX, I think, is indicating about a 67, 70 odd point lower start. We've been saying that immediately, I mean, dips are good and the dips do get bought. But I would say hold off, at least. Even if you get a 70-point lower start, hold off for the first hour, 1.5 hours, see what the market is saying. Maybe the dip gets a little deeper and then decide, once you're closer to those levels I put out, to decide to act. So stay put and watch the market. Let the market tell you what it wants to do. Sonia.
Oh, absolutely. And, you were talking about how there is definitely caution in the system. You can see it in the banks, right? That's the biggest drag on the index. Not just yesterday, but for the last many days. I mean, the Nifty is not only struggling to conquer all-time highs, but look at the Bank Nifty. The Bank Nifty is now down 500 points from the 13 June high of around 44,100. And I want to pull up Kotak Mahindra Bank because in the month of June so far, in 20 days of June, Kotak Mahindra Bank is down 10% already. Others like ICICI Bank are also down about 3-4%. But the Bank Nifty is the one that's really dragging the market lower and preventing the market from hitting all-time highs. So that's one pocket. The other thing is both foreign and domestic investors have been selling in the cash market, and that's not a good thing. So yesterday, FI sold about 1,030 crores, large amount. DI selling was not too much, but just a little under 400 crores of selling from DIs as well. A couple of things that I'm watching out for. Of course, the US markets were shut overnight, so we don't have any cues from there. But all eyes will now be on Fed Chair Jerome Powell, who will be testifying in front of the Congress on Wednesday and Thursday. So we will be watching out for any commentary on that front, what happens with the next meeting. You may not get any signs of whether they will hike rates or not in the next meeting, but some commentary will be crucial for sure. In earnings, there is a FedEx that reports their numbers, later. So later on Tuesday. So we'll, keep an eye out on that. Apart from that, in stock action in our own markets, there's HDFC AMC, which will be in focus. Aberdeen is looking to sell their entire 10.2% stake in a block deal. That's source-based information, so we'll keep our eyes peeled on that. And Indigo, of course, Surbi was talking about it yesterday as well. We'll focus on that today. The deal is finally done. They've ordered 500 aircrafts from Airbus worth $50 billion. And this is the single largest deal in the aviation industry, in the history of the aviation industry, by one single player. So, of course, it assumes a lot of importance. More on that in a bit. But overall, I think for the market, some caution is definitely needs to be taken on board, especially with what's happening with the Bank Nifty, where private sector banks are big laggards now.
Oh, yes, absolutely. And caution across Asia as well. I mean, look at the way these markets are trading. Again, it's not the kind of move that you can ignore. Should pull up the Hang Seng. And the SGX Nifty is mirroring that. I mean, we're looking at probably a 50-point decline at the start if you go by the SGX Nifty. So these are decent cuts coming across Asian markets. And this despite that the Chinese central bank has delivered on expected lines by ushering in more rate cuts. So because of that, we'll watch for the metals market. And I would have said that maybe we'll get a nice metals rally. But given the mood, looking at the way Asia is trading right now, not sure if we'll get even that metals rally or not. Now, what has the Chinese central bank done? The cuts are along expected lines. We're talking about 10 basis points in the 1- and 5-year loan prime rate. And remember, the cuts started last week when we had that reverse repo rate cut around 10 basis points and the 1-year MLF cut happening in China. So all of it is moving along expected lines, and markets are not too enthused right now. So let's see. The other thing is, while China is cutting, maybe this is a market, markets around the world, repricing the reality that the Fed will hike. If you look at the CME Fed Watch tool right now, the probability is as high as 75% of a 25 bips hike in July. So maybe that needs to go through the system, that if the market around the world was hoping we'll quickly start seeing rate cuts by the end of the year, maybe that's not the reality, and that repricing needs to happen. And perhaps that's what we're witnessing right now. Which brings me to the FPI flows picture. Sonia was mentioning yesterday's selling. If you look at June has sobered off compared to the major numbers that we were getting in May. So let's pull out the FPI inflow tally as well. June's inflows are now just around, I think, 16, 17. Yeah, there we go. 17,000 crores, just under that. And we're, rounding up on the 20th of June right now. May was this blowout month. The rally started in April. That's when the FPI flows turned positive. Feb and January were absolutely disastrous. So let's see. We need to watch this FPI screen also in some detail. Now, that brings me to this underperformance on banks that Sonia has been talking about. Prashant mentioned it as well. So in the month of June, the Nifty is up just about 1.1, 1.2%. Banks are down 1.5% thereabouts. The IT index is the biggest underperformer. So one question that I'm asking is there any end to the IT underperformance? Look at the way the IT part of the market started seeing some accumulation yesterday, even in a fall. We need to see if that's a trend in the making. But the bigger watch point is going to be the mid-cap rally, this absolutely breathtaking move that we've seen. The micro-cap index is up 7% this month, the month of June. Mid-cap index up 4-5%. So the key question that I'll watch out for is that if we start falling at the headline level, not just stalling, but maybe cooling off, then will the mid-cap rally become vulnerable? So, some watch points. Today, by the way, Sonia, you mentioned Airbus. Today, all the railway stocks are going to be in focus as well, because there are some very interesting, developments with respect to the RVNL order. Seems there might be a cancellation there in rebids. So we'll see. I mean, mid-caps have had this flourishing move. But I wonder if the headline indices start falling, then whether that can remain on track.
Well, people are not too concerned. I had a chance to chat with a few market experts, and one of them, actually, Gautam Dugar of Motilal Oswal Financial Services, expects the market to trade range-bound with a positive bias. So give and take everything, he expects the markets to have a positive bias going, especially in mid and small caps, which are showing better momentum. He expects that to continue. He adds, after a long time, both macros and micros are doing well together. They continue to stay positive on consumption with a preference for ITC, Britannia, Titan, Metro and Indian hotels. NBFCs offer a good tactical trade, so some reallocation from banks towards NBFCs can be prudent.
Okay, let's get you some money market views now. This is Rupee. On the Rupee, Abhishek Goenka of IFA Global saying that the dollar is weakened against major currencies post the Fed and the ECB rate decision last week. The Rupee too has appreciated by about 0.6%, tracking broad dollar weakness. June is on course to become the fourth straight month of net FPI inflows into domestic equities. Dollar Rupee pair is now approaching the lower end of the 81.6 to 82.9 level. And the risk to the view on rupee appreciation stem from the underperformance of the yuan and weak May trade deficit.
And on the bonds, Ajay Magnolia of JM Financial says globally yields trade at elevated levels amidst uncertain trajectory of monetary policy. He says UK yields too hardened in expectations of a hawkish policy decision this week. He says Indian bond yields are trading at the upper band, driven by overnight index swaps and a lack of positive cues in the auction cutoff seen on the higher end for demand-supply equation. Ajay says positive sentiment is slowly fading away and liquidity remains an issue. He adds that state loan auctions expected to inch up a bit today compared to last week. He expects the 10-year benchmark bond yield to trade in a range of 7.03 to 7.08% for the day.
Okay, we have lots of stocks to watch out for as usual. So in just a bit in our top 10 segment, we will cover the likes of HDFC, Interglobe Aviation and Coforge. That's on the back of positive news flow. There's HDFC, AMC, Timken India, Ather Industries, RVNL, BHEL, Titagarh Wagons and IIFL Securities. These could perhaps be on the red side today. More details coming up.